All right. So, the market's been a little shaky lately, right? And maybe you're thinking, okay, where can I put my money to ride this out?
Yeah, for sure. And there's this interesting article from the Motley Fool that we're diving into today that talks about Berkshire Hathaway.
Oh, Berkshire Hathaway, Warren Buffett's company.
Exactly. And specifically, they're looking at whether now might be a good time to buy their Class V shares.
Yeah.
Those are trading under BRK.B.
Gotcha, BRK.B. Okay, so why Berkshire Hathaway? Why now?
Well, I think it's important first to just touch on who the Motley Fool is. They've been around since '93, and their whole thing is helping people invest smarter.
Yeah, I've seen their website. They've got a ton of articles and stuff.
Right, and they're all about making the world smarter, happier, and richer. That's their motto.
Okay, I like that. So they're saying Berkshire Hathaway might be a good bet right now. Why is that?
So let's zoom out for a second and look at the bigger picture.
Yeah.
The S&P 500 is down around 9% from its high point earlier this year.
Ouch. That's a pretty big drop.
Yeah, and the Nasdaq is even worse. It's officially in correction territory, which means it's down more than 10%.
So things are looking a little dicey out there.
They are for a lot of companies, but that's what makes Berkshire Hathaway so interesting because it's actually done really well this year.
Really? How well are we talking?
Up over 17% in just the first 3 months of the year.
Wow, that's going completely against the trend.
It is. And on top of that, their market cap is now at $1.4 trillion.
Trillion with a T.
Yes, with a T. It's the only company outside of the tech giants to hit that $1 trillion valuation.
That's wild. So what's their secret sauce? What's making them so successful while everyone else is struggling?
Well, one of the big things is that Berkshire Hathaway is often seen as a safe haven when the market gets rocky.
What do you mean by safe haven?
It means that investors tend to flock to it when they're worried about losing money.
Okay, so it's like a less risky bet.
Right. And there are a couple of reasons for that. One is that they own a bunch of businesses that aren't really affected that much by economic downturns.
What kind of businesses?
Think about things like GEICO car insurance. People still need to insure their cars, even if the economy's bad.
That makes sense.
Or Berkshire Hathaway Energy. They handle electricity, and gas people need those no matter what the economy's doing.
So they've got a pretty solid foundation of essential businesses.
Exactly. And then on top of that, they have a huge amount of cash on hand.
Like how much are we talking?
Their fourth quarter earnings report showed $334 billion in cash.
Holy moly. That's a lot of cash.
It is.
Yeah.
And it gives them a lot of flexibility to make investments when they see good opportunities.
So they're kind of in a position to swoop in and grab bargains when other companies are struggling.
Right. And that's a big part of why they're considered a recession hedge.
A recession hedge.
Yeah, meaning that if the economy does go into a recession, Berkshire Hathaway is likely to do better than most other companies.
Okay, so they're kind of like the tortoises and the tortoise and the hare story. Slow and steady wins the race.
Exactly. They're not necessarily going to have the flashiest growth, but they're built to weather the storm.
All right, so let's say I'm interested in buying some Berkshire Hathaway stock. What am I actually paying for? What's their valuation like?
So the article breaks down their value into three main parts. They have their wholly owned businesses, their stock portfolio, which is worth about $288 billion, and then that mountain of cash we talked about.
So how do we figure out what their operating businesses are worth?
Well, you basically subtract the value of the stock portfolio and the cash from their total market cap, which leaves you with around $518 billion.
Okay, and what are those businesses actually earning?
Last year, they generated about $33.8 billion in operating income.
So we're talking about a price-to-earnings ratio of around 15.
Yeah, that's about right. And for a company like Berkshire Hathaway, with their track record of stability and steady growth, a PE of 15 is actually pretty reasonable.
So it doesn't sound like they're overvalued?
No, not really. They're not exactly a screaming bargain, but they're definitely not overpriced either.
Okay, so let's go back to what you said earlier about the Class B shares. The article mentioned buying below $550. Does that refer to the Class B share?
Yeah, that's right. The Class B shares are the ones that most people buy because they're much more affordable.
How do they compare to the Class A shares?
The Class A shares are like super expensive. They trade for around $800,000 each.
$800,000 for one share.
Yeah, they're meant for institutional investors and really wealthy individuals.
So for us regular folks, it's the Class B shares.
Right.
Okay, so the Motley Fool is saying that if I'm a long-term investor and I'm a little nervous about the economy right now, Berkshire Hathaway might be a good choice.
Yeah, I think that's a fair takeaway. It's not a guarantee. Of course, no investment is.
Sure.
But they have a lot going for them. They're financially solid, they're well-positioned to handle a recession, And they have a lot of cash on hand to take advantage of opportunities that come up.
And they seem to be fairly valued right now.
Right. They're not a screaming bargain, but they're not overvalued either.
But of course, even a company as big and stable as Berkshire Hathaway can still have some ups and downs in their stock price, right?
Absolutely. It's important to remember that even the best companies can see their stock prices fluctuate in the short term.
And it's probably safe to assume that Berkshire Hathaway isn't going to just skyrocket in value overnight.
Right. The author of the article thinks that Berkshire Hathaway will be worth a lot more in 10 years, but he also says that it probably won't be a smooth ride to get there.
So patience is key.
Absolutely. Investing is a long game.
And it's also worth noting that the author of this article owns stock in Berkshire Hathaway, and so does the Motley Fool.
Yeah, they're transparent about that in the article.
Oh,
It's always good to know if someone has a vested interest in what they're talking about.
definitely. So just to wrap things up, what are the main takeaways for our listeners?
Well, we saw that Berkshire Hathaway has been a bright spot in a generally down market. They're seen as a relatively safe investment, and they've got a ton of cash to work with. Their operating businesses seem to be reasonably valued right now.
And although we can't predict the future, it seems like Berkshire Hathaway could be a good option for long-term investors, especially those who are concerned about a potential recession.
Right. And, they might be a good option to help you sleep better at night, knowing that your money is in a company that's built to last.
That's a good point. So here's a final thought for you, our listeners, to ponder. Imagine a company with as much cash and as many different businesses as Berkshire Hathaway. What possibilities does that open up for them that other companies can only dream of? How does that kind of financial strength change the game when it comes to weathering economic storms and seizing opportunities?
It's really interesting to think about how a company like that can shape the future.
Absolutely. Well, that's all the time we have for today's deep dive into Berkshire Hathaway. Thanks for joining us.
It was a pleasure being here.
And we'll see you next time.
See you then.